Dear students, today we are discussing the topic benefits or importance of fund flow statement. What are the benefits of preparing a fund flow statement? These benefits are discussed in following topics. First one, it is useful to shareholders. Okay, a fund flow statement is useful to shareholders in different ways. And the second party is long-term creditors and debenture holders. Fund flow statement is also used by long-term creditors and debenture holders of a company. And third one is, it is useful to short-term creditors, banks or financial institutions. So short-term creditors, banks, financial institutions, etc. are using fund flow statement. And another benefit is that it is useful to management. Okay, then let us go through these four areas in detail. Okay, the first area that we are discussing is useful to shareholders. A fund flow statement is useful to shareholders in different ways, and it includes the following. First one, it provides information regarding availability of fund in the business. Because in fund flow statement, we analyze the fund, the position of fund, the changes in fund, etc. So with the help of fund flow statement, the shareholders will get an information regarding the availability of fund in a business. ഒരു ബിസിനസ്സിൽ ഫണ്ട് ഉണ്ടോ ഇല്ലയോ എന്ന് അറിയാൻ സാധിക്കും. Second one, it indicates the earning capacity of the business. ഒരു ഫേമിൻ്റെ ഏർണിംഗ് കപ്പാസിറ്റി കൂടി നമുക്ക് ഫണ്ട് ഫ്ലോ സ്റ്റേറ്റ്മെൻറ്റിലൂടെ മനസ്സിലാക്കാൻ സാധിക്കും. ദെൻ തേർഡ് വൺ, ഇറ്റ് എനേബിൾസ് ടു നോ ദ എബിലിറ്റി ഓഫ് ദ കമ്പനി ടു പേ ഡെറ്റ് ഡിവിഡൻറ്റ്. ഓക്കെ, ഒരു കമ്പനിക്ക് എല്ലാ സമയത്തും ഡിവിഡൻറ്റ് കൊടുക്കാൻ പറ്റില്ല. കാരണം ഇഫ് ദർ ഈസ് ഫണ്ട് അവൈലബിൾ ദേ വിൽ മേക്ക് പേയ്മെൻറ്റ് ഓഫ് ഡിവിഡൻറ്റ്. ഇഫ് ദർ ഈസ് നോ ഫണ്ട് അവൈലബിൾ ദേ കനോട്ട് മേക്ക് പേയ്മെൻറ്റ് ഓഫ് ഡിവിഡൻറ്റ്. സോ ഷെയർ ഹോൾഡേഴ്സ് ആർ ദ ഇമ്പോർട്ടൻറ്റ് പാർട്ടീസ്. They have to know whether they will get dividend or not. So with the help of fund flow statement, they can identify whether the firm has the ability to pay dividend or not. Then the second party we mentioned was long-term creditors, debenture holders, etc. It is useful to these parties to understand whether the company can pay interest or not. Long-term creditors or debenture holders have to get interest in time. So when there is a fund flow statement, with the help of that statement, these parties can understand whether the company can pay interest or not. Second, to judge the capacity of the company to repay the loan or debentures. The debenture holders or creditors have to receive back their investment in the company. They have to get the refund of their investment. So when there is a fund flow statement, they can judge the capacity of the company to repay their loan or debentures. Okay, another party we mentioned was short-term creditors. Short-term creditors, bankers, financial institutions. These institutions, these parties provide short-term fund to a company. So fund flow statement is useful to these parties to know whether the money borrowed is utilized or not. They can identify whether their fund is used by the company or not. Second one, to know whether the company can pay their interest. These parties have to get interest from the company, and they can identify whether the company is able to make payment of their interest in time with the help of a fund flow statement. Then to know whether the company can repay the principal in time. These parties have to get back their investment in the company. So they have to judge whether the company is able to repay the principal in time, and it is possible with the help of fund flow statement. Okay, then and the fourth and important party using fund flow statement is management. It is useful to management in different ways. First one is to plan temporary investment of funds. If there is an investment opportunity, it should be planned by the company, and that planning is possible by looking whether there is fund available or not, and that planning is possible with the help of fund flow statement. So the company, the management can plan temporary investment of funds with the help of fund flow statement. Second, to evaluate the proper utilization of funds. When there is a fund flow statement prepared, it shows the sources and uses of funds. So the management can evaluate whether all the uses are effective or not, whether there is proper utilization of fund by the company or not. Next one is to formulate sound dividend policy. A company can make payment of dividend only if fund is available. So they have to take a sound dividend policy only with the help of availability of funds. Next one is to estimate future working capital requirements. Fund flow statement analyze the current position of current assets, current liabilities, working capital, etc. So management can estimate future working capital requirement with the help of fund flow statement. Next one is to test whether the working capital is utilized effectively or not. നമ്മുടെ വർക്കിംഗ് ക്യാപിറ്റൽ ഇഫക്റ്റീവായി ഉപയോഗപ്പെടുത്തിയിട്ടുണ്ടോ ഇല്ലയോ എന്നറിയാനും ഫണ്ട് ഫ്ലോ സ്റ്റേറ്റ്മെൻറ്റ് മാനേജ്മെൻറ്റിനെ സഹായിക്കും. നെക്സ്റ്റ് വൺ, ടു ടേക്ക് ഡിസിഷൻസ് റിഗാർഡിംഗ് പർച്ചേസ് ഓഫ് അസറ്റ്സ്. വെൻ ദർ ഈസ് an asset to be purchased, there should be fund available, and the availability of fund can be judged with the help of a fund flow statement. Next, to identify unnecessary investment in fixed assets. The unnecessary investments can be identified with the help of the fund inflow from these assets. If there is no inflow of fund from a particular asset, it is considered as unnecessary investment. So unnecessary investment in fixed assets can be identified with the help of fund flow statement. The next, to understand reasons for financial difficulties. If there is non-availability of fund in a company, or if there is financial difficulty, stringency in a company, they have to identify the reason for such a financial difficulty, and that difficulty can be analyzed with the help of fund flow statement. Okay, the next, to plan for redemption of long-term debts. Whether the debt is long-term or short-term, the repayment requires some fund, and the repayment can be planned by the company by looking at the fund flow statement. Next, we are discussing a small topic, that is identification of current items. Okay, for the preparation of fund flow statement, it is compulsory that we must distinguish between current items and non-current items. So I am going through, I know you are everyone familiar with the current items and non-current items, but I am repeating these items once more. We have to go through the items of current and non-current assets and liabilities. Current assets, it includes stock in trade. We know it is stock. Then next is short-term investment. Short-term investments means investments are, if the term investment is given, it is long-term item. If the word short-term is given, it is considered as current item. Okay, then bills receivable we know, then sundry debtors, then advance tax. Tax paid in advance, it is treated as current item, because if we have paid advance tax, it will be settled within 1 year. Within the current year itself, the advance tax paid will be settled with the income tax department. So advance tax should be taken as current item. Okay, cash in hand we know it is a current item. Cash at bank is a current item. Then prepaid expenses, accrued income, etc. These are these are the financial accounting adjustments. Okay, prepaid expense means expenses paid in advance. Accrued income means income earned but not received. These are considered as current items. Okay, then next, current liabilities. current liabilities include sundry creditors, bills payable, bank overdraft, then outstanding expenses. Okay, outstanding expenses, we know prepaid expense is a current asset and outstanding expense is a current liability. Then provisions. Okay, all the provisions are taken as current items. Provision for bad debt, provision for depreciation, etc. should be taken as current liabilities. Then provision for discount on debtors should be taken as current liabilities. Then income received in advance, accrued income. Accrued income is an asset and income received in advance is a current liability. Then tax payable, another item. Tax payable is taken as current liability. Tax payable is a current liability and advance tax is a current item. Okay, if it is an item tax payable, that amount should be paid within the current year itself. That is why it is called, it is taken as current liability. The next, provision for tax. We made a provision in profit or loss account for tax. So if we have made a provision, the amount should be paid in the current year itself. Okay, it is taken as a current liability. Then dividend payable. Dividend payable means dividend declared but not paid. It is taken as dividend payable. It is also a current liability. Then proposed dividend. Proposed dividend means dividend proposed by the directors but not paid. Okay, the proposed dividend will be shown in balance sheet. So this item will also be taken as current liability. But you should notice one thing, that there are some items which can be considered taken as either current item or non-current item. That is provision for tax, then dividend, proposed dividend. Provision for tax, proposed dividend, etc. can be considered as either current item or non-current item. That means it may be taken as current liability or non-current liability. You notice these two items. We can make accounting adjustments in the fund flow statement as either current item or non-current item, but we have to consider the situation. Okay, but now we are discussing it as a current item here. Okay, then next we are discussing non-current items. Non-current items means fixed items, fixed assets and fixed liabilities. We know goodwill. Goodwill is a fixed asset. It is an intangible asset. Land and building, plant and machinery, furniture and fittings, vehicles, patent and trademark. Patent and trademark is an intangible asset. Okay, investment, long-term investment. Long-term investment is a long-term asset. At the same time, if there is the word only investment, it is also taken as non-current item. Okay, preliminary expenses. Preliminary expenses are fictitious assets. Okay, it will be shown on the asset side of balance sheet, so it should be taken as non-current item. Then profit or loss account balance. Profit or loss account debit balance, not credit balance, debit balance. Profit or loss account credit balance will be there on the asset side. Okay, it means loss of the company, accumulated loss of the company. It is also a fictitious item. These are considered as non-current assets. Okay, next, non-current liabilities, fixed liabilities, equity share capital, preference share capital, general reserve, then profit or loss account credit balance. Profit or loss account credit balance means balance of profit. Then capital reserve, capital redemption reserve, securities premium, debentures, long-term loans, then provision for depreciation, then tax payable. Tax payable we have taken, it may be taken as current item or non-current item. Provision for tax, it may be taken as current item or non-current item. Dividend payable may be taken as current item or non-current item. Proposed dividend may be taken as current item or non-current item. So these items can be taken either as current item or non-current item. The rules regarding whether it should be taken current or non-current will be discussed later in our next videos. Okay, so with this topic we have identified the different items of current and non-current items. And one more thing that I have to say is that there may be provisions for some items. For example, provision for doubtful debts. Provision for doubtful debts we have taken as current liability. Okay, the or provision for depreciation may be there. Okay, so in all these situations, for example, debtors, I am giving you an example. Debtors 40,000, provision for bad debt 2,000. Okay, balance will be 38,000. So there may be a confusion as to what is the amount to be taken in fund flow statement, whether it is 40,000 or 38,000. There are two rules. There are two options. First option is you take 38,000, no problems. Second option is that you take 40,000 as asset. At the same time, 2,000 should be taken as liability. Are you clear? For example, if there is sundry debtors 20,000, the general rule is that sundry debtors 20,000, then provisions 3,000, balance 17,000 will be given in the balance sheet. Okay, then in this case we can take 20,000 as the value of debtors. So it is taken as current assets. And on the liability side you take 3,000. On the liability side, when we shows the liabilities, show 3,000 as current liability. When 20,000 is current asset, 3,000 is current liability, the net effect will be 17,000. Okay, generally this rule is generally used, that is we will show the total value of current asset on the assets and the total value of current liabilities as liabilities. You don't worry, all these items will be discussed in our later videos when we discuss the fund flow statement. Okay, thank you.